In this video, we're going to look at how we could have used simple technical analysis to have easily profited on the huge move that AIG recently experienced. So, if we pay attention to just the fundamentals and the background of the stock, we would have never thought it could go from 10 to 50 in just a matter of a month or so. Yet, that's what it did. And by using the technicals, we could have easily cashed in on, if not all, at least some of this move. So what we start out is, we saw that the stock came from 500 down to underneath 10. Now once it hit underneath 10, you see it kind of bottomed out. It went up to the top and then started consolidating, meaning that it was either going to break out below or break out high. You can see we could create a simple wedge pattern right here. And what's so great about this is that the wedge pattern means that you're waiting for something to break out. So obviously if the stock went below, then that means, we don't want to buy anything. If it goes above, then that means it's time to buy. So you can see that the stock just burst right through this line and with huge volume. So on a break of this line should have triggered you to make your first entry into the stock. And you can see the stock went from roughly 12 to 20-ish. And once it got there, it hit the 50-day moving average. And remember, moving averages can act as support and resistance. So once it went above and came back down, depending on how your trading is, if you just wanted to cash in your profits, which you should have at least taken some profits off this huge move, then I would probably have sold a portion of my shares. Then what we do is we wait for what happens the next day. If the stock goes lower, then we know we probably want to get rid of more. However, on the next day, the stock continued even higher, pushed right past the 50-day and hit the 200, again with large volume. You can see it went up and came down, and then it kind of bounced back up and around. I would have probably held on until this move right here. I would have probably held on right there until this red dot. And then I would have sold because I would have thought, come back down below the 200 moving average. So between that point right here, we made roughly the move from 10 to 25 easily with really the basics of technical analysis. Nothing simple was used so far. And nothing hard, I mean. So now we see the stock kind of came down, bounced off the 50-day moving average, and surged back up past the 200 SMA, again with large volume. If this part right here would trigger another buy average or another buy mark past this 200 SMA right here, this red line. From there, I would have held, and this is where it gets kind of tricky. You could have held on the move, and then you could see the stock kind of consolidates again. So, kind of gives a flag almost. So what happens, I would have waited to see which way the stock broke. So if it broke below the line here, I would have sold. But obviously you see that it broke back above the next resistance. So you're in the money again, and you just ride it all the way up to 50. And at this point, from 10 to 50, it's kind of hard to guess what's going to happen. From here, I would have just held on, probably sold a little bit more of my portion, and just played a little bit with house money and whatever is left. So that is how you could have used simple technical analysis to profit off the huge move of AIG.